Will the stablecoin bill and Grok 4 launch the market into a 1999 style stock market bubble? Right person to ask. I was an internet analyst back in the 99 bubble, providing information to Wall Street, sell side, buy side, Jim Cramer, you name it. We're going to talk about it on Stock Talk Live. Let's just get the audience in. If you're a newbie, if you're tuning in to the replay, stay tuned. We're going to get the show started. It doesn't look fancy, but I'm here in the middle of Europe. Chisinau, Moldova. Ever heard of that? Not too far from Ukraine. All right? That's how we do. Globe hopping, jet setting, and still giving you these picks that made me multi-bags in 98, multi-bags in 99, multi-bags last year, and multi-bags this year yet again. Let's get the audience in here. I'm going to confirm the audio and video in 1 sec, and then we're going to get the show on the road. Here we go. Our thumbnail, one of our androids doesn't have a head, but he's got a bubble. That's cool. All right, that'll work. And boom. All right, we got audio, we got video, we got just enough people. Hey, you veterans out there, though, you can do better. You can do better. Share that invite. Retweet the tweet. You feel me? I come here every week and do this for you for free. I used to get 5 racks a month from every Wall Street customer I had out there for nothing but my email updates. Pretty much. Okay? I'm giving this to you for free. The least you can do. Thumbs up and share the live so we can get everybody in here, especially this being a Thursday show instead of a Friday. You feel me? Help me get the people in here. There we go. That's what we're talking about. That's what we're talking about. That's what we're talking about. Hey! It's Money Mark. It's Stock Talk Live. We got another big show from Europe. As usual for the last couple. I like that. We got some sound effects as well. Hey, R.I.P. Hulk Hogan. Just got the news that he passed away. That's crazy. That's really crazy to me. That just takes me back to my childhood. Watching the first WrestleMania, watching Hulk Hogan versus Andre the Giant. I'm really sad right now, but the show must go on. So, hey, in memory of the Hulkster and the 24-inch pythons, let's do this. This is week's edition of Stock Talk Live. First, of course, I must put this on the screen. I'm not going to read it. You have to acknowledge that if you are continuing to watch this show, everything that you hear and see is contingent on what is on this screen. And therefore, you acknowledge that you have read it or had somebody read it to you, understand it, and decide to move forward with this clown show, a parody. This is a complete parody of Jim Cramer of CNBC. It doesn't mean nothing. Nothing I say means anything, and I can do anything with my trades that I want no matter what I say. Good enough? Good enough. All right, let's get to it. I'm not going to waste time on all this stuff. If you're new to me, if this is your first time seeing me, go back, let's say, 2 or 3 shows. In fact, go back to the Multi-Bag of Madness show. That's approaching 5,000 views. You'll get, right, information on who I am. You got my Twitter right here. You've got my website right here. By the way, no advertisements, no subscriptions, no sponsorships, no freaking nothing. I retired in 2009 and I didn't plan on answering to anybody. So if I accept revenue from anybody, somebody's my boss. Ain't nobody my boss. So I don't accept no money. Everything I do is for free, for you. This is my way of giving back because my mentor gave this to me for free. A loser in a basement, paying $143 a month, near homeless, now living in a penthouse apartment in Miami Beach. Big as you can imagine, next door to billionaires, including a major player on Wall Street that you all know. We're not going to mention him. I don't mention him every week, you know, very rarely. Try not to. Privacy, you know what I'm saying. All right, let's keep moving here. By the way, if you don't already know, watch this video. This is the instruction manual to what I do. If you don't understand some of what I talk about on this show, you are robbing yourself from the opportunity of making millions like I did. This helps you to learn what I learned over the course of 10 years full time that you're trying to figure out in about 10 minutes. You want to be the 10-minute millionaire. All right, cool, we'll try. But that's up to you. I'm leading the horse to water. It's up to you to drink or drown. You can watch this video on your own. It's only 1 hour to learn everything about me. I'm not going to go over this. I'm not going to go over this, although this is my track record. You'll see no losers since May of last year. What is that? 2, 3, 4, 5, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Boom, right? Plus 2 more over here. That's 14 winners straight, okay? You can look that up online too. Everything you need to know about me is in the description of this video, all right? Enough of that. Let's keep going. We're not going to talk about macro. We are going to talk about macro this week, but we're going to skip over this other stuff right here to get to some real macro stuff, which the stablecoin bill. I know this is not a crypto show. Okay, we'll put this on the screen for now. Okay, this is not a crypto show. This is a stock show. But the stablecoin bill has major implications for stocks. Let me walk you through that real quick, and then we're going to get into it, because between the stablecoin bill and what's happening in AI, especially what happened in AI this week, stay tuned, we might have enough gas on the fire to launch this entire stock market into what I experienced in 1999. Let's go right to the charts. Boom. You see that right there? Y'all know what these risk reward charts are. If you watched my video, I already have warned you. If you watched the video, you know what these lines mean. Okay? This is not supposed to happen, but it did. Okay, so we need to be cognizant of the possibility of something like this happening. You don't want to go all in, and you don't have to go all in to make millions off of this. Because if this doesn't happen, then this might happen. Okay, it usually does. Usually when we hit the red line, we get big drops in the market. So why are we even talking about pushing forward instead of getting more cautious? Already cautious. I've got hedges in place, but I am tempted to take them off. In fact, as I continue to find new winners we're going to talk about today, I'm buying those stocks and not hedging them. Okay? Because of what I'm seeing happening right now. If the market starts to fall apart, if the story starts to fall apart, so be it. I got millions. I made millions this year. I'm making millions every year. I can afford to lose one on something like this. I'm not saying go all in, but I'm saying be cautious, but not as cautious as you might be in a situation like this. I'm going to explain why. All right? And once again, boom, this bubble, which officially launched basically on January 1st of 1999, right? We hit yellow alert territory right here at the end of 98. And then 1999 proceeded to give the NASDAQ a 180% return. The whole QQQ was up 180% from the end of 98 to the beginning of 2000 before the crash came. We'll worry about the crash when it's time to worry about the crash, but that is not now, because the crash came. Remember, I was there. I was an internet analyst, feeding information to Morgan Stanley, Goldman Sachs, all the mutual fund companies that you know of, some of which weren't even around back then, the big ones now, right? Including firms owned by Jim Cramer, George Soros, and if you saw the movie Dumb Money, Stevie Cohen, all customers. Okay? Back in the day. What did we see back then that allowed me to call not only the bubble and say, no, this is going to keep going, this is going to keep going, this is going to keep going, and then say the music's going to stop? Here's it. Real simple. The bubble formed because corporations around the world were scared. Okay? They felt the need, self-preservation, to buy internet technologies at any price because they didn't want to get Amazoned. They didn't want to end up like Borders Bookstore. all right, crushed by the advent of online book sales. We all know Amazon sells more than books now, but that was what it was back then. They didn't want that to happen then, so they said, what is this internet and what's going on with it? Let's buy the technology, let's figure it out. This seems like a big deal, and it was, but it was too soon at the time. My firm specialized in letting corporations know what was going on with these technologies, okay? But while they had to figure it out, so they had to spend money, they had to tinker, and that sent a flood of money into a ton of companies, pushing a ton of stocks into bubble territory, many of which didn't deserve it, many of which did. I can name for you far more stocks that you've never heard of that were high flyers back in 1999 than I can name winners that came out of it, okay? Broadvision, Vignette, Arc Technology Group, you know those companies? They were big winners back then. Ariba, Commerce One. None of them are individual public companies anymore. Okay? So you have to be careful. I'm going to help you with all this. Right? Now, what caused the bubble to break? Right? Well, we had all that spending. Right? Everybody's buying internet technologies. Everybody's overpaying for it. And then all of a sudden, right? And this usually happens at the end of a year because that's when the budgets get flushed out and a new year begins with an all-new budget. They just pushed all their chips in, all the rest of every dollar that was left in those budgets, boom, off the table at the end of 1999. Boom, 2000 starts, and everybody feels like we all bought internet technologies, we're all playing with it, and we're all figuring out it's not quite ready for prime time. So what happens? As early as November 99, before the end of 99, I started to see a drop-off in inquiries, requests for information. December, a drop-off in requests for proposal. This is business terms, right? This is what happens on the way to you have a request for information, a request for proposal, the selection of a winning vendor you're going to buy technology from, right, amongst the competitors that you got information from, a negotiation, and then a signed contract. This is the sales cycle, okay? So the start of the sales cycle broke down, and then the middle broke down, and that told me that the end was going to break down. And if you don't sign contracts, you don't make revenue, and what happens when you don't make revenue? You miss your numbers, and sure enough, Q1 was a freaking bloodbath, and it launched a 2-year bloodbath in the market. There's your history lesson. Let's fast forward to today. AI, Grok 4. Bro, this is not a bubble. Not yet, at least. The things we're seeing AI do continues to astound the analysts, including myself. I'm the one that told you the crazy story of how an Avengers movie was going to be made fully with AI in about 10 years. I said that 2 years ago, right? When people were saying, NVIDIA's a bubble, NVIDIA's a bubble. And I said, NVIDIA's not a bubble. Back when it was 42. What is it now? 172. Okay? It was not a bubble. You can see that now. How did I know? Most people guess. These 10,000 bozos out there are guessing. I'm an actual analyst with actual skills that these guys don't, with contacts. There's a method to this. If you've watched me long enough, you know. If you don't, go to my X account and see what's pinned up there. Finding multi-baggers with Money Mark. And you'll hear what it takes to find multi-baggers the real professional way. And then you can ask all the other 10,000 people on the internet if they've done what I do to find these picks for you. Okay? So, we're gathering information. What we're finding is AI is doing more and more and more than what we expect. That 10-year time frame for the Avengers movie might only be 2 now. From what we're seeing, go to YouTube and type in VO3, and you'll see all these videos being made. I've already made one myself. It took me 15 seconds. It's absolutely insane, and that's just one application. Never mind if you load a 3D model of the Earth into AI. Never mind all the things that an artificial brain, think of anything that a human mind can do. Imagine AI doing most of that, being capable of doing most of that, okay? Now, let's layer on top of that stablecoins. And let me tell you about that real quick, because what we're getting in this legislation is basically the ability for banks to issue stablecoins. What is a stablecoin? It's effectively a crypto that represents $1 US. But it has to have $1 US sitting in the bank to exist. So what's the big deal, you might ask? Simple. These banks around the United States are required to have a certain amount of cash sitting there at the bank in case you and me go and try to take money out of the bank. They don't want the bank to run out of money. They don't want the bank to fail. So they force the bank to have a certain number of reserves. So those reserves sit there. Big bags of money sitting around doing nothing. Until now, because the government's thinking, and I don't know, this might cause something nasty later down the road. It always does. We're not worried about that right now. What we're worried about right now is the fact that if this goes through, they're going to be able to take those bags of dollars and create stable coins with them and issue those stable coins out. The dollars, the bags of dollars have to stay behind, but the stable coins can float out. $3.5 trillion worth. Going around the world to people everywhere, including countries like this one right here. This is the thing a lot of you don't realize. That for somebody, let's say in Argentina, where their currency collapsed, or Turkey, where the currency collapsed. I remember being in Turkey and negotiating a deal to take out a whole Turkish bath for me and my friends and family for a couple of hours. We want it all to ourselves. I want you to shut down the Turkish bath. How much do you want for that? We negotiated a deal, right? I pulled out my credit card, but the dude saw my US dollars, cash, sitting in the wallet. And the dude, after all that negotiation, said, I'll give you an extra 20% off if you'll pay in dollars. Why? Because the Turkish government wasn't allowing the Turkish citizens to get US dollars. And the Turkish citizens wanted US dollars. Why? Because they knew that the Turkish lira was crap, was losing value. And it actually collapsed. That dude made so much money by taking my US dollars. He got that 20% back real quick, okay? This is the dilemma for people all over the world in countries not named the United States of America, okay? So that's one of the reasons why Bitcoin is so popular around the world. One of the many reasons, okay? And the reason that I think it's most legit. I don't love cryptocurrencies. But I understand, right? Just like gold, all right? We're going to get to the stocks in a minute. Stay tuned. The audience is still growing, so I know I'm telling you something that you care about. Let's put a bow on this thing. So, what happens if people around the world who are concerned about their currencies going down, including United States citizens worried about the dollar going down, right? We want cryptocurrencies too, but people around the world want access to something stable, access to the dollar, which they can't get normally. Well, stablecoins will allow that. And guess where that money will go? What? You're going to get the stablecoin in Turkey, right? Backed by a US dollar at JP Morgan. And guess where that dollar gets to go? Into a US Treasury. So all of a sudden, you have buyers for U.S. Treasuries where you didn't have them before. Don't ask me any more questions. That's as close as I've been able to gather for this week. But what that means is liquidity. Remember what I told you? One of the most underrated parts of the U.S. market, of the stock market, is liquidity. How much money is sloshing through the system. Excuse me. This threatens, in a good way, to send a flood of additional money through the system. It could end badly. I know. But for now, it could launch a bubble. Because in addition to the flood of liquidity, you have AI really taking off, doing amazing things. And Elon is not sitting on his ass and saying, Grok 4 is great. I'm all done. Look it up. Grok 4 just destroyed everybody else. They just did the benchmarks on Grok 4 coming out of Colossus. Remember TSSI? Remember how let's zoom in on TSSI. Come on. Where's a good view of, there we go. That's where I told you to buy TSSI. Why? Because I had concrete proof that TSSI was integrating the servers that were going into XAI's Colossus 1, which at the time was only known as Colossus, because there was no Colossus 2. Well, guess what? Now there's a Colossus 2. Colossus 1 ran Grok 4. Grok 4 is kicking everybody's ass. Colossus 2 now has about 500,000 Blackwell GPUs in it and makes Colossus 1 look like an insect. It's not Colossus anymore. I didn't have time to come up with anything clever to call Colossus 1, but it's more like Colostomy 1 compared to Colossus 2. Okay? This is what's happening right now. What happens once that's fired up and powering Grok 5? No, this is getting serious, because that's just the start. Because Elon wants to take Colossus 2 to 1 million GPUs. So let me get this straight. AI is doing more than everybody expects. Therefore, all the big guys, Google, Amazon, Facebook, you name it, have to invest in it. Because if they don't, what are you going to do? Let Elon just take over the world with AI? Have everything running on Elon's AI? No. That's why you had Google, was it last night, up their CapEx forecast. We're going to spend more money, investors. Stay tuned. Okay? We're going to get into individual stocks in about 2 minutes. I'm landing the plane. You understand what's happening now? Because of Grok 4 blowing everybody away, because Elon stepping on the accelerator saying F 100,000 chips, F 400,000 chips, and F them being Hopper chips, I want 1 million Blackwells. I can't even tell you how many times more powerful that's going to be. Like 50 times more powerful than Colossus 1 when it's done? Something like that. And now everybody's going to have to follow suit. Google needs 1 million chips. Amazon needs 100 million chips. Facebook needs 1 million chips. Microsoft, Apple, what are they going to do? Let these guys take off? Leave them behind? No. And here's where we start talking about stocks. What this means, and by the way, for you guys that tuned in, Money Mark, retired, 30-year veteran of Wall Street, former Wall Street analyst on the internet. I'm doing this for free because my mentor taught me for free, 2 hours a week for you. All I ask is a thumbs up, and for you to let people know that there's somebody like me willing to help people like you in a world where colleges are ripping you off. It's a fact. And CNBC is ripping you off. It's a fact. They're making you think they're teaching you something. They're not. They're getting your money. Colleges are a country club. They teach you some stuff, but I learned less than 10% of what I know from college. Thank you very much for all that debt, a-holes. And CNBC wants your advertising dollars. They want your eyeballs on the screen, and they'll say anything they need to. Never mind. I've said it before. Let's keep moving. Thumbs up for the guy willing to tell you the real and keep it real at no cost. You know what I get back? Contacts. You guys are sending me information from all over the world, from your companies. Some of you work in AI. Some of you are telling me what's going on at Dell. Some of you are telling me that I've made you a millionaire when you were down in the dumps. And that makes me feel good. So I'm getting information. I'm getting kudos. I'm getting a lot from this. I love it. Okay? Boom. Thumbs up. Let's move on. So, what does this mean? It means this could get ugly. This could get crazy. Nvidia has now spent more time above my red line. You're supposed to know what this red line means. It's not technical, by the way. Hint, hint. The 10,000 people out there, I think I'm the only one drawing risk-reward lines. I coined the phrase. It's mine. Okay? You got to know how to build these. You can't do it as a technician. You can't do it as a day trader. You cannot do it. Okay? I said sell Nvidia here. It tanked. I said sell Nvidia here. It tanked. Here. It tanked. Here. I'm not going to tell you to keep a full-size position. In fact, I own no Nvidia right now, and I'm okay with that because there are places where I can make more money with more surety or close to the same surety because Nvidia is going to drag everybody along. If Nvidia takes off, if Nvidia goes to 200, right, which is about 15% from here, 200 is, I'd say, closer to 20. 15, I was right the first time. Should have stuck to my guns. If Nvidia goes up 15%, we have stocks that are going to go up 50, 100, 250. So you don't need to own Nvidia to get rich off of this. We're going to talk about a lot of those names here and now. I lost my notes. These are all my notes for the day. But we're going to wing it because I know it's all up here. Let's go to the tabs. Okay, we're going to go through the news and we're going to start talking. I got a whole portfolio of names I can pull up on my screen over here. I got a whole set of emails with information that I want to take you through. All right, but we can start while I'm stalling for time. I'm not going to have to stall for time because I can take you through this week's news. 1, 2, 3, 4, 5 news items. Off of AI. In fact, no, this is AI. All right, drones. What do you think is running these drones? What do you think is going to run these drones in the future? What do you think is happening with Anduril right now? Anduril showed a school bus-sized submarine that goes off on its own autonomously. Just see it, take care, go do some shit, and it goes off into the oceans around the world, looking for what it's been programmed to do, and taking action on those things. That's AI. Okay? Running these drones. So as AI gets better, drones are going to get better. We're going to take soldiers off the field of war increasingly, which is already happening. You hear about drones everywhere, right? So the drone plays are in play. Just be careful. You got to worry about valuation. This is the thing. You just can't buy any one of these companies. You can in a bubble, because everything will go up. But here's the problem, is you're going to fall in love with your name. And when the bubble bursts, the companies that are real are not going to completely implode, but the ones that are fake will. How do you know the difference? Well, the CEO said, shut up. He's stupid. CEO isn't there to tell you the truth. He's there to be a cheerleader for his company. And in some cases, a liar. Okay? 10 years to learn how to be a good stock analyst. What the F would take 10 years to learn? Not math. Okay? 156 IQ, I learned math before I got out of high school. I could do all the math that I ever need for stocks, I knew before I left high school. I just didn't know how to apply it. Okay? And that's what we learned through this. Applying that knowledge, which I'm here to do for you. You can learn it maybe over time, but just know this. You don't know. You don't know. So be afraid. Be afraid that your money is going somewhere where it could get destroyed, just like it got destroyed back in 1999, well, 2000, when the losers got crushed and the likes of Apple, Amazon, Google took off. Facebook took off. Ariba, Commerce One, Broadvision, Aehr Technology Group, Vignette, all down, like 99% each. Okay? My portfolio is up several hundred X since back here. Several hundred bagger is my portfolio. Yours, if you put your money in those 5 stocks, you'd have 1% of your money left. If that. I might have $1 million for every dollar you'd have left. That's the difference. Do you want to be a millionaire, or do you want to just take your chances, roll the dice, and have fun? Tell you what, you could do both. Become a millionaire first, make your second million, play with that, and use the first million to make more millions the way that I do it, and then play with your million the way you want to. Right? Not a bad idea. Become a millionaire first and then do it your way. Now, so what does that mean? Companies like Mobilicom are in a good position. Okay? Now, let's get this straight. I look for tens. Right? If you pay attention to my videos, if you take your notes, you know I look for tens. The stock market is a bar full of pretty women. And you're the only guy on earth. Why should you pick anything but a 10? And I don't mean fake boobs, bleach blonde hair, Botox, etc. No, I don't want all that. I want that natural 10. That 10 on the outside and the inside, right? I want it all. You are not going to find that just by looking across the bar. That one. That's what a lot of y'all are doing with stocks. You're literally going, that sounds good. Let's go, baby. And you get home and there's something in her pants other than what you were hoping. Wah, wah. You see what I'm saying? So I'm going to keep it real. Mobilicom is a second tier player. I did the analysis. I did the research. It took a while, right? I was hoping that they were a best of breed provider of technology to go into these drones. They're not, but they're still good. Okay? So you could still make money, especially because the stock is cheap. And how do I define that in this case? Mob stock. You got a market cap of 27 million, okay? They got about, let's say, 7 million in cash, so you're only paying about $20 million for the company, all right? And then to top it all off, detailed financials. Of course, you got things ramping up with drones. They only got 3 million in revenue, right? But the revenue grew. They went from a minus 55% growth rate to a positive 36% growth rate to a positive 45% growth rate. Okay? They're not only growing, but they're growing at a faster rate, which they need to, because 3 million is not enough to justify a $20 million valuation. However, here's the thing that's kind of interesting. They spend about 2 million a year on R&D. That's a decent amount of R&D for a company with a market cap or an enterprise value of 20 million. Market cap's 27. We subtract the net cash, because cash is just cash. They could just give us that cash, and it would still be the same company minus the cash, right? So that's the enterprise, right? So a market cap gets broken into net cash and the enterprise. Your enterprise value is what we care about. The enterprise value is about 20 million. We got some revenue going with that. We got some good R&D going with that. And we have perhaps their largest deal ever. I mean, bro, they did 3 million last year and they just got $1.4 million order in one order. Okay? If you're somebody like me, you could figure out who this customer is. One of the largest manufacturers out of a current shut up, bro. A tier 1 manufacturer with over 5 billion in annual. I already know who it is, because I know Mobilicom's current customers. I know the large manufacturers of small-sized drones. I know who the tier 1s are, and I know who has over 5 billion in annual sales. It's Teledyne. It's Teledyne. And Teledyne, if you look them up, you will see that they're getting a lot of business from the U.S. government. In fact, you could simply go to Perplexity. I mean, I try to go to Grok from now on, right? Let's go to Grok. F it. Right? It doesn't matter. You just need to be using an AI. Is Teledyne getting an accelerating number of orders for drones? And it'll give you the answer. I don't know what the answer is, so I might look stupid in a second. Yes. I did know the answer, but I didn't look up the answer before, and I just knew it because I had done my research, okay? That's how you make money in the stock market. I see about 15 of you dropped off. That's cool. Those are day traders. You know what I'm saying? And they don't want to know the real thing. Boom. All right? You can read this on your own. You can look this up on your own. Bottom line is, Mobilicom's in a pretty good position, right? It is not an official pick. It's not an unofficial pick, but I do own some of this stock. I told you I was going to talk about more stocks this week that aren't necessarily official or unofficial picks. Do not effing ask me, what will it take to make it an official? Shut the F up. What it'll take for it to become an official pick is something that you can't ascertain, so it does. Puts the ass in ascertain, right? So it's something that only I will know. So if I make it an official pick, you'll find out when I make it an official pick. Don't ask me. You know what I'm saying? I'm giving you picks. You guys ask for picks, I'm giving you picks. Don't ask me for more than that. All right, so that's Mobilicom. Decent. It's not a big position for me because it's not a 10. But they're going along for the ride. The stock's cheap. You see the chart right here. I do look at technicals. You know, we have the stock spike recently to 450. Now it's 350. That means to get back to 450, I get a 27% return, right? If we blow this out so that we can look at this a little more stretched out, because I do look at technicals, white lines, white, gray lines, right? As opposed to the red and green fundamental lines. We're going to play with this until it looks right. Really quick. Create parallel line. Get rid of that one because that didn't work. We want to be conservative. Right? That's probably what we're looking at. But not really, because the blue line's here. So it is possible here that this is actually, the blue line being the 200 moving average, of course, but this is the 30-minute chart. We can't do this in real time, you know what I'm saying? But there is a pretty good approximation of what this channel, this technical channel, looks like right now. So we're sitting at the lower end of the channel at 350 with an opportunity for it to go to 550, which would be a 55% return. Okay, it's got the wind at its back, so that's good. So, okay, there you go. Decent possibility. Well, I'm going to move a little bit faster. I just wanted to give you a flavor for how I'm going to give you picks that are not official in the spreadsheet picks, because you know what goes in the spreadsheet are tens. I'm looking for picks. I want to keep the streak going. 14 months, 14 picks, 14 winners. Name anybody else that's done that. Name anybody else that's done that. 14 picks, 14 months, 14 winners. Oh, and by the way, the average winner, average, over 112%. Why over 112%? Because we got these here that are over 112% average. This one, let's not even count that because I just made this pick 2 weeks ago. So it's just getting started. We'll talk about them too. All right, let's keep going. Aehr, A-E-H-R. A lot of you are here to hear about A-E-H-R, I know. Okay. Just a couple days ago, new orders. They didn't say how big the orders are. But if you are a former Wall Street analyst like myself, you could find out. I've got contacts. I can make phone calls. I've got AI working on my favor, right? Let's do this. We have to edit that because that's old. Those are old technical lines. It's going to create a whole new technical formation here. I don't know what it's going to look like. In fact, we can get rid of this completely because it's not even, it broke the channel. It doesn't exist anymore. And it doesn't even matter because we're in the risk-reward range. Look at that. It dipped a little bit below my green line, right? And we've got this look. Let's see. Boom. Here's where I picked it originally, well below the green line. Yes, that happens. It happened with TSSI. Went from 2 to 52. I wasn't there for the whole ride, admittedly, right? But we got a full picture now. I had the green line in place. The stock dipped down to the green line. The green line was at 8. The stock got down to 650. Whoop-de-doo. Remember, if the stock breaks the green line, that's not the same as breaking a technical line. When you break a technical line, that's bearish. When you break a fundamental line, That's what this is, a risk-reward line. It's bullish as long as the story remains intact. And the story remained intact. In fact, the story got better. They went from EV gold mine to AI gold mine. Watch the video if you want to know what that means, okay? So, what's going on here? Let's blow the chart up. We've got the red line above 60 bucks. Stock's still only at 21. That means it's still a triple from here if the company starts operating on all cylinders. Y'all know the rules. Go watch the videos. Watch my past ones. If you don't understand, I'm sorry. This is for the veterans. This is for the people who actually go through the trouble of reading my instruction manual. That video. Okay? Sharp move up on the order. I got the biggest question I got on this big move here, as much as almost 40% from the announcement of the news to the recent top in the stock. Was this deal worth 40% of the company's market cap? No. But what the F does that matter? You dumb? What kind of question is that? We don't care about that. We care about what does this order mean for the future cash flows of the company. Because the value of any company is the current value of its future cash flows. Okay? And what this deal told us is that we've got liftoff. We have a follow-on order that more than doubles the number of units that are at this customer, which I believe is either Amazon or Google. I forget which I thought it was. Okay? And, right? Amazon or Google. That's who I'm putting my chips on, that this is. And I believe it's going to force anybody, and this is a company making their own AI processors, not NVIDIA processors. They buy NVIDIA processors also, but they also want their own processors. There's a lot of processors going on here. All right, you got to know what's going on. Don't worry about it. It's not bad for NVIDIA. It's normal. All right, but as we see this Blackwell ecosystem evolve, there's going to be more and more new chips, Navitas and VTS. We're going to talk about them, right? Power, everything. And it's all high-powered stuff, increasingly high-powered stuff, which makes it increasingly likely that Aehr Test Systems is going to be wanted and needed for that. Well, why didn't they need them before? Stupid, were you not listening? Blackwell ecosystem. Blackwell just started ramping up a few months ago. But AI's been around for 2 years. Did you not listen? Blackwell just started ramping up. The Hopper ecosystem was not the same as the Blackwell ecosystem, and the next ecosystem will be different than the Blackwell ecosystem. And those changes are where you make money if you understand them. Okay, so let's keep going here. Bottom line, if we see one major hyperscaler testing their chips with Aehr, to me it means we're going to see more. More from that one customer, more customers coming online, more pressure for all of them to do the same, because they all are going to want those high performance chips that don't die. And that's what Aehr helps with. Infant mortality. It kills the weak chips so that the only chips left in the stack are strong ones, and you put the strong ones into your data center, you throw the weak ones out. Okay? Because if you put the weak ones in the data center, guess what? You're only as strong as your weakest link. All right? So that's Aehr. That's why the stock moved as much as it did. I thought it was justified. All right? I haven't gotten rid of any part of my core position. I traded the stock that morning. As soon as I saw the news, I read it real quick. I was like, oh, this is going to move. And I bought more shares. And then I sold some of those shares as a trade. And I kept some of those shares like, what the heck? I want a bigger position. That's how you do it. I trade and I invest, right? Both. I do believe, I don't know what's going to happen next. Maybe if you're a day trader or a technician, you're better at that than me. But what I do feel is that this company is starting to operate on what looks like all cylinders. Okay? It's not yet operating on all cylinders, but you can hear the engine revving and it sounds like 1, 2, 3, 4 cylinders running. Okay? And this is, the 10-point, we got a 10-point scale. We're looking for 10s. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We're looking for all 10 cylinders to be running. It feels like we're going to get it. Okay? So I don't want to play too cute with this, given what we're seeing happening here. That's them. Oh, and by the way, if you want to know why nobody can F with them, just do this. Do this search yourself, right? You can freeze this later and look at, this is the website that I've loaded in here, and what are the implications for Aehr? It will tell you about this. I also I asked about its strengths versus the competition. It told me about that. There's a lot of IP. This company's been doing this for a long time, and it hasn't really, what they do hasn't really been needed until they hit gold mine here in 2021 for EVs, and they didn't gold mine for AI until here. So almost nobody really knew they existed or cared until recently. And from what I can tell, their top competitor right now is like some Chinese company that's doing it half-ass and breaking their patents in the process. Aehr's out there litigating. Not that it's going to really matter, because I don't think Aehr's going to sell to China. All the business is going to be in the US and other parts of the world that they care about. So guess what? They're the big dog when it comes to this. All right, we've done the research. I actually spent a lot of money. Some of y'all helped out, chipped in for a research report examining all the players in this space, and Aehr came out the #1 player, the 10. All right, so that takes care of that. Oh, Mobilicom again. Good, that takes care of that. And that takes care of that. We got one tab left, and then we're going to go to my emails, and then we're going to go to my my personal portfolio, and right at the top of the hour, we're going to try to go to Q&A. If you've got a question, put it in the chat. Right? Put a question mark at the end of it so I know it's a question. If you've asked a question about some random stock that I've never talked about before, and I don't know, how would you know that unless you've been watching my show? Do not ask me about a company that you haven't heard me talk about before. Do not ask me a question about a company I haven't talked about before, or I'm going to yell at you. And if I yell at you twice, I might kick you off the show forever. No more questions for you. You'll become the dummy of the week, and then you'll be gone forever. F the week. That's one thing. 2, don't troll me. I don't care. Doesn't bother me. I'm a battle rapper. I get trolled all the time. It's fun for me. It's fun for me. For you, it just means that mommy and daddy didn't love you well enough. But that's not my problem. I'm just going to delete you off the show immediately for being a troll, and that'll be the end of you. So have your fun now. Just know that you're not getting a rise out of me, because I don't care. There's zero you can say. You could post a video of me with my lover at the Coldplay concert. Not going to bother me, because it didn't happen. All right, so let's go. Intermap. ITMSF. Yes. Yes. Yes, I can type. ITMSF. This is an AI company. Why? Because the stronger the AI gets, the more thirst there is going to be for data to feed. Remember how I said earlier? What if we feed a 3D map of the entire Earth into Grok, into Colossus 2? Wouldn't that be crazy? Well, it's feasible, because Intermap is the premier player when it comes to getting data to create a 3D map of the entire Earth. In fact, they've done it for many countries. There is now an Indonesian order out there. It looks like it's going to be upwards of $200 million. And Intermap is best positioned to win that deal in a couple of months. Okay? Stay tuned. It's no guarantee. But we do know, regardless of that, that's one country, 200 mil. One country. There's way more than 100 countries out there. That's way more than $20 billion of business that can be had around the world. All else being equal. Not exact. Don't quote me on that. I'm just giving you a sense of order of magnitude, right? And you can ask this question, simple question, is Intermap Aehr technology really proprietary? I'm not going to read this for you. You can go and look it up yourself. It'll give you the same answer it gave me. But what you'll find is a proprietary set of patents, software, hardware, that they put. Look, all these losses that they took. This was a loser. I knew this stock way back here. I've been following this stock forever because I knew at some point something was going to give, that this data would become valuable. I didn't know that AI was going to do this, but once it did, I was like, yeah, we want to own Intermap, right? And in fact, you want to see something funny? You see that right there? You see that? Boop! That right there? That's me. That was me taking out the last seller, the last big seller at 32 cents. Thank you very much, seller. I have now a 7-bagger in just over 1 year. I've now gone long-term capital gains on a 7-bagger. Voila. Okay? That's how you triple your money in a year, by having 7-baggers, TSSI, ITMSF, etc., etc. Boom, there's your information on Intermap. Let's go to my emails and see, what do I have that I wanted to tell you about? Opera, maybe. That's not them. That's them. Just in full disclosure, I'm not going to tell you much, but these guys have a browser. The browser seems to be like a primary way of delivering AI searches. You see me going into, I go into my browser, I type in Perplexity. I go into my browser, I type in Grok, right? Somebody, one of the hyperscalers, might want to acquire Opera so that they have access to a browser. Apple has a browser already. Google has a browser already, Chrome. Microsoft has a browser already, right? Not everybody has a browser. Anthropic doesn't. OpenAI doesn't, right? So you start thinking about Grok doesn't have a browser. I think Elon's going to want something because he's going for it, right? I'm not saying they're going to get bought, but just putting that on your radar screen because I've got it here. What else we got? Oh, yeah. Let's see. Drone Shield news. Yeah. See this on the screen here? So funny. The huge Australian $300 million deal that we were talking about. And some of you asked me, Mark, why did you close Drone Shield from your portfolio with a $300 million, this is an Australian company, and there's a $300 million Australian deal out there. Why would you close the position before we find out about that? Simple, Simon. Because I drew my risk-reward chart with all of that in mind. Okay? And the stock reached the top. That's a white line. It got up to here. So you can adjust it. It's okay. Minor changes. Doesn't matter. Any of this is fine. Right? We'll leave it there. It got up to my white line. Not red and green yet. Just couldn't get there. I'm very regimented. I'm not going to turn my white lines red and green until they are ready. Okay? I'm not going to call it a 10 until it's ready. I'm not going to make it an official pick until it's ready. I made it an unofficial pick. High praise. It's like a 9+. Okay? And from that point, 55 cents, it went to $1.75. That was more than a triple. You're welcome very much. And then it kept going. But Mark, it's still going, $300 million deal. Well, guess what, dummy? It's down 8% today after announcing that they landed a win here as part of that $300 million deal. Here's the problem. A little disappointing, actually, because $300 million wasn't dished out. Not yet. I think it will be. But they got $5 million out of 15 plus million that was dished out. 15 million in contracts given out, and 5 million went to Drone Shield. So any of you out there that was hoping that Drone Shield was going to get a $300 million deal, sorry. It seemed a little far-fetched to me, and now we're seeing that it's true. That doesn't mean this is not a great company. That doesn't mean the company won't continue to go higher. These lines could be wrong, right? But it's a great example for you of how you can lose even though you win. Why? Because people anticipated this. They saw it coming. It was priced in. And you could see that it was priced in because the stock was even above my line without the announcement. Pigs get slaughtered. Don't be a pig. And yeah, it's still good. It's still sitting right close to the line and all that. But I've already moved on. I took that money and I put it in something else that went up already. The money was better off somewhere else, is the bottom line. All right? So that's Drone Shield. What else? What else? What else? Live, XAI. Oh, yeah. I already talked about this. Elon is... Oh, and this is for TSSI also. We'll put TSSI on the screen. Okay? Funny Elon, he learned this from Trump. He said like a week or two ago, I am not looking for money for XAI. Not interested in raising money for any more money for XAI. Like, I'm going to keep it all for myself. Right? Obviously, you're going to go get more money, Elon. You can't buy more chips without more money, and you want more chips. But that's okay. Play your game. Artificially inflate demand for your shares. Let a line form outside the club even though nobody's inside. And sure enough, this week he comes out, yeah, just kidding. 12 billion with a B dollars I want to raise to go buy another $500,000. And by the way, he didn't say it's to buy another 500,000 chips, but when I ran the AI on what $12 billion will buy him, it's pretty damn close to another 500,000 chips, which gets him pretty close to that million chips that he said months ago, and I reported on, he wanted before the end of the year. Okay? Around the same time that Dell reported a giant backlog, and I told you this was off to the races. And Dell's off to the races. And TSSI was off to the races. And I got out. And I didn't stay in. And where was it? Somewhere around here. And I made a mistake here because I was traveling in Europe. Okay? So I had to back off. It wasn't a mistake. I don't regret it. It wasn't a 10 for me anymore because I was wondering if it's still a 10. If I'm wondering if it's still a 10, I need to find out before I declare it and keep it a 10. So I said, let me do something, baby. Let me put you on the sideline let's go on a little break. I need to think about if I want to put a ring on your finger. Okay, so we went on a little break. We came back, we got back in, and she rode all the way to the top and then kept going, right? We got out here, it went to here, it got back down to here, and now it's kind of actually outperforming my risk-reward lines. That's not a surprise. It can happen. But these risk-reward lines have been damn good if you look at it. If you bought here, sold around here, bought around here, sell around here, you're doing great. You're not top ticking and bottom ticking it, but you're doing great. You're making crazy money. This stock is up almost 10x since I picked it. But you're up more than 10x because you got almost 10x here. And then you got back in here and got another. Jeez, I messed up the lines. From 6 to 26 is another 4-bagger. If you get a 10-bagger and then you get a 4-bagger on top of that, that's a 40-bagger combined. You multiply them. You don't add them. Okay? This is how it's done. Risk reward. So, is Elon's desire to raise $12 billion going to send TSSI into the stratosphere? Maybe. but let's be careful because I don't think there was much action in the June quarter. I think there's going to be a lot of action in the September quarter. So I own some of this stock. Now, I didn't, but I had puts sold. That's a bullish position. I had some puts outstanding, right? I didn't buy puts. I sold puts. Difference. Ask AI or YouTube what that means. Don't ask me. I'm not here to teach you that stuff. That's basic stuff. Okay? But I also added some shares to my position, not a lot, because I'm still trying to figure out the balance between the June quarter not being very active by my data points and September likely being highly active by my data points, and a little wrinkle, which is how much of this business is going to go to TSSI, because in the first batch for Colossus, they split it with Supermicro, which I told you to get out of back here. I told you to short it, in fact. That worked very nicely. And then around here, I told you, don't be short the stock anymore because they're needed. They need to be brought back into the fold because TSSI cannot handle all the business that's coming. That's the problem. Because TSSI went from 50% of Colossus to nearly 100% of Colossus. And now we're going into Colossus 2. And they are not only going to share with Supermicro, but it seems like they're going to also share increasingly with Dell itself, because Dell has a facility in Franklin, Massachusetts, where I actually used to live. Okay, so what we're trying to figure out right now is what's TSSI's share of the next batch of data center integration business. Are they going to get 80% and Dell takes 10 and Supermicro takes 10? Wildly bullish. Or is Supermicro going to take half and Dell going to take 25% and they give 25% to TSSI? Right? If it's a 50-50 split between Dell and Supermicro and Dell takes half of that half, then TSSI only gets a quarter. And then that's not so exciting, right? Especially from this level right here, where these guys have to be dishing out at least 25 cents of EPS per quarter to justify this. 25 cents times 4 is $1, right? At 25 bucks, that's a 25 PE for a company that gets 97% of its revenue from one company, and Lord knows how much business they're going to get going forward, especially because I've been doing some research on what's going on with AEHR. And what I'm gathering is some of the burn-in that AEHR does is going to help to obviate, not eliminate, but obviate some of the burn-in that TSSI does. Take away some of the work. So and listen, there's pros and cons to every story. You TSSI bulls, don't freak out. Don't think I'm talking bad about TSSI. No, I'm just giving you the facts. Okay? You rah-rah boys out there, nah. We don't play that here. Professionals look at all the positives and all the negatives, weigh them out appropriately, and figure out what the story is. Sorry. That's the way it's done. That's why I make the money I make. That's where I live, and you don't. Nanny, boo-boo. Okay, we're past 1 o'clock, so I'm not going to dive into my portfolio, personal portfolio, yet. Or maybe this week. Stay tuned next week if I don't get to it. I want to get to Q&A. If there's time at the end, then we'll talk about more stocks in my personal portfolio. This is what you guys asked for. You wanted to hear about more than just one pick per month. And I'm giving you a flavor of the kind of information I get. Once again, if you love, and by the way, you newbies out there, don't sign off yet. The Q&A is a lot of times a lot more fun and informative than what I give you on the show, because these are questions that you want the answers to, the charts that you want to see, things like that. Okay, so check it out. Let's go in here. Don't forget, give me the thumbs up, because this is all free, no sponsorships, no advertisements, no partnerships, no nothing. I am not asking for anything for myself except for you to tell other people that I'm here doing this for you. The thumbs up helps to do that. Putting a comment in the chat helps to do that with the algorithm. Let's go to the Q&A and let's see what we get. I get a lot of thanks in there. I do read all these comments after the show, so thank you for all that. I'm looking for the questions. Oh, MBJ, dummy question. I hope it's not a dummy question, MBJ. You've been getting yourself in trouble with me already. Why is the red line sometimes in the bottom of on your charts, even when it isn't inversed ones like our... That's not really a dummy question. I used to put the red line down here and the green line up here, but it confused people. The majority said that it makes more sense to them that red means stop, green means go, put the green means go at the bottom, and put the red means stop at the top. Simple as that. Okay? For inverse ETFs like RWM, forget about it. All right? Risk reward lines are primarily for indices and stocks. They'll work for ETFs as well, but I don't really play them that way. Okay? Not a bad question. MBJ, you might actually be getting smart. The dummy might be getting smart. That's what, ladies and gentlemen, that's what happens when you buy a $1 pen, a $1 notebook, and watch the instructional videos and pay attention. You start to go from dumb, I'm sorry, most of you, when it comes to doing what I do, on the level that I do it, if you want to become a multimillionaire making 7 figures a year, you have to become something like me. And on that level, most of you are dummies. No offense. I used to be one of them. Next to my mentors, I'm still a dummy. And I accept that. You know why? Because it motivates me to not be a dummy, to elevate, to constantly elevate myself. Because I wouldn't mind being a billionaire someday. And all it takes is continued movement up the ladder. Do it. Next question. Dude, Jacob. Yeah, dude. Ozzy too. How did I forget? Bro, 2 icons in my life. Okay? I remember being scared. I think I was 10 years old. I wasn't scared of Ozzy. I was scared of Metallica. The album Kill 'Em All. I'd never seen or heard anything like that before. It was scary. It was a little bit scary for a 10-year-old. But I remember wanting Diary of a Madman, Ozzy Osbourne. Rest in peace, Ozzy. I got to see him up close and personal once. I should have shook his hand. Goosebumps. Let's keep going. Stocks. TGI, FTGIT. Yes. Good afternoon. Would you please share with us the risk-reward charts for NVTS? Let's start with that one. And see, this is why I don't need to go into my portfolio, personal portfolio, because I can give you a little bit of chat on some of these as I get chart. I don't have any lines on this yet. I'm working on it. I just know that they are a beneficiary here because their power ICs are part of why the Blackwell ecosystem is so power efficient relative to what it's dishing out, okay? Gallium nitride, silicon carbide, Aehr, I hear through the grapevine, you won't see this on stock twits, garbage twits. By the way, watch out, people are impersonating me, okay? Make sure you're dealing with the real deal. I got 7,000 followers on Twitter, about close to 3,000 on stock twits. Don't fall for any impersonators. There's a lot of them out there. But anyways, the information I got is that NVTS loves AEHR, loves the technology. Okay? Are they a customer yet? I don't know. I haven't gotten that information yet. It makes sense that they would become one, though, because I do hear that they love what they're seeing from them. It only makes sense, though. Gallium nitride, silicon carbide, you know, semiconductors used to be made out of silicon. Oh, that's one word. Makes sense. Oh, easy. What about gallium nitride, silicon carbide? These are compound semiconductors. Compound semiconductors are better at power consumption, and Aehr is great at compound semiconductor testing. Simple from that level. So I like Navitas. I like Navitas on pullbacks because I haven't figured out what it's actually worth yet. But they have a flood. Watch. Just watch the next few quarters for NVTS. Now, I don't know about Q2, but Q3, Q4, watch what you see in terms of year-over-year growth for this company. It's going to be significant. But I have to figure out what that's worth. Because that could be worth only $5. And the stock's going for $8. Or it could be worth $80 and it's going for 8. You got to do the math. You can't just, I'm going to back up the truck on NVTS because it's 8. 8's a small number. It's not how it works with stocks, dummy. I want to buy this 8-cent stock because it's cheap. No, it's not necessarily cheap. It might be very expensive at 8 cents. MoviePass was very expensive at 8 cents. It went to 1/100th of a cent. If you bought MoviePass at 8 cents, despite what I taught you about, oh my God, I'm wearing the same shirt that I was wearing in the MoviePass movie, if you saw the MoviePass movie that I'm in. I'm the dude that blew the whistle, showing proof that this was a complete sham. It died. They sent movie crews to my house. They put me in the movie for 15 seconds despite that. It's funny. They were looking for a different story. Anyways. On semi. There's your chart on semi. On semi is doing a great job with silicon carbide chips. Silicon carbide chips are becoming popular again. Even though I warned you about Tesla. Up in these regions, I warned you about Tesla, this line. Look at this. I'm going to do this. Look at that. That's Tesla, since I told you guys it's too expensive. Let me move this line so I can show you Tesla. Oh my God. Oh my God. And up here, same thing. Oh my God. 7.7 months, down 36%. Over the last 7.7 months, I'm probably up 150%. Maybe 250%. I've lost track. I count my chips at the end of the year when the tax man cometh. That's a big waste of your money, losing money like that. But they're not the only player out there. The technology continues to evolve. So we get new chips, new chip designs. On semi is actually bouncing pretty nicely. I wouldn't buy them here because that looks a little precarious. It's been a hell of a move. But keep an eye out. If we get a breakout here, yes, I do talk technicals a little bit. Maybe it's a buy. It's a big company. For a big company, I want the fat pitch. Down here, it was worth a little bet. Here's what the chart looks like. These guys, this is the best silicon carbide chip maker. Why? Why are they the best silicon carbide chip maker? A lot of people don't know. But this is why. Because they use Aehr Test equipment. Using Aehr Test equipment, onsemi creates the most reliable silicon carbide chips. And that's important. You can imagine why. Because if you get an inferior silicon carbide chip and you put it in the EV and it fails, your car fails. You're on a ride from Miami to Orlando, going up the turnpike, or worse, down the turnpike at 2 a.m., back from whatever you were doing that night, when almost no gas station is open, large stretch with no gas station at all, and your EV just stops running. Okay, that's on. QIPT, no comment for now. They're an acquisition candidate, and management is resisting the acquisition calls. So it's a drama. I've talked about it before. Go watch that old video. SNES. Oh, look at that. We got to zoom in. Look at this. This is why you want to stay away from pump and dumps. This was a pump and dump for a long time. This company was actually split adjusted $500,000. It was a $500,000 stock. It was never $500,000 actually, but it's reverse split its way down to $5 from $500,000. So if you put $500,000 into this stock back here, you now have $5. Congratulations. But now we can zoom in. Technical chart. These lines will never be red and green. How do I know? Because look at the annualized. You see this box? The second to last line says annualized. No company can grow at much more than 20, 30, 40% per year over the long haul. So you'll never see one of these lines have an annualized number in excess of 20, 30, 40%. This one says 7,600. That means for sure, these are just technical lines and always will be. But in the meantime, the company itself could be worth, right? Depending on how long it stays, is how long this technical channel lasts, the stock could just keep going up in this technical channel until it, let's see, maybe that's the level. Maybe that's the valuation. Maybe that's where I put my risk reward line. I don't know, right? This is just the path that the stock takes to get to the risk reward lines. And I don't know if the risk reward line belongs here or here or here. We're working that out. But I will tell you this is what the channel looks like right now. I will tell you also that I do own a decent amount of this stock. I think the risk reward is significant. It is kind of speculative, but the evidence that we're gathering, much more of the evidence is leaning positive than negative. Stay tuned for more on that. I can't, this is not the show for that, right? When I complete the analysis, right? Hopefully nothing major comes and blows this thing up and, geez, you know what? This is just junk after all. Hopefully it all comes back positive and I come up and tell you I think this stock could go to 50. I can't do that today because I'm not done with my analysis. But I am leaning positive on this. That's the last chart you asked for, PPSI. There's your chart on PPSI. They gave out a $1.50 dividend. I don't know. I think I may have adjusted the chart for that $1.50 dividend because I wrote $1.50 dividend. If I wrote $1.50 dividend, that means I must have adjusted the chart down. It's fine that it went below my green line. It's just like it's fine that it went above the red line. We can get rid of these technical lines because it broke that channel. It broke that channel. So none of that means anything anymore. That's all that's left there. Okay. What do we got for the 20%? See? Annualized 20%. I think this company can grow its bottom line 20% if it operates on all cylinders, which it hasn't proven itself. I don't own any of this stock right now. I haven't seen them do enough to prove to me that they're actually really needed. And by now I would have expected them to do something because what they do seems like something that would be valuable right now. Allowing for different sources, nuclear, grid, gas turbines, use them all interchangeably, run the wires through our system, and we'll make sure that you're getting the optimal power, the optimal mix of power that you need, the optimal price. We'll use the grid at night when nobody else is using it. We'll use nuclear. We'll use gas when it's cheap. We'll use nuclear the rest of the time. Sounds cool, but where's the execution? I got to do some more work on this one to see why there's been no execution. I haven't had time to get the update, but so far we haven't seen it, so we got a little bit of time. Let's keep going. My notes show at the end of June you indicate you were going to meet with the CEO of KRMD in the first week of July. Jeff, I do think I talked about this on a prior show. If I'm wrong, guys, let me know. But I'm going to skip this question because I do believe I've spoken about this before. We've got some smart people retracting their messages. See, that's smart. Know when your question is dumb, get rid of it, and all is forgiven. Because I'll never know what it was. Hello, Mark from Canada. Hello. Constructora. You're welcome. I'm looking for question marks. Last week, I mentioned new SNES contracts. You seem cautious on the stock. With the recent move, has your perspective changed? Well, if by recent moves you mean new contracts, I expect that. The contracts are not affecting my view of the company. The stock's movement is not affecting my view of the company. Ever, never, ever, ever, ever does a stock's movement affect my view of the company. It's the opposite. Just making sure you know this, because maybe it's not what you meant, but I want to make sure that anybody that heard the question knows. Okay? never judge a company based on what it's done. Somebody must know. Shut up. Shut up, stupid. A company's stock goes up because there's more buyers than sellers. And any number of things can cause that, especially when there's so many freaking idiots out there buying and selling stocks. I'm sorry. Idiots. 99% of buyers of stocks are what I would call an idiot. A stock market idiot. Might be smart in real life. Probably are. Half you are. Right? Smart, dumb. Half and half. But in the stock market, as far as professional level investors go, 99% fit in the dumb camp. So anything can happen. My job, the reason I make the big bucks, the reason I'm living in a penthouse, the reason I get 7 figures a year, the reason I'm getting emails from a lot of y'all telling me that I've made you tons of money. One more telling me that I made him a millionaire just in the last week from next to nothing. Because we do it professionally. You guys are thinking too much. You're overthinking things, number one. And number two, you're not thinking about the right things. It's crazy. You got the right things here, the right, let's say 5 things that you need to think about. And then you got the wrong 50 things over here. And you're thinking about like all 50 of these crazy things that you need to think about when there's only really 5 that you need to know. Go watch the videos, pay attention, right? Don't ask what those 5 things are. It's not 5 things. But it's far less than what you're thinking about. Don't forget to like the video. Looking for question marks. How does one track RFI, RFP flow? Thanks for explaining. Makes so much sense. That's a great question. You pretty much can't. I worked for AMR Research, now owned by Gartner Group. Great company. Look at that stock. Look at that chart. Okay. I competed against Gartner Group from the beginning of this chart. Literally, almost literally, it was 94. This chart goes back to 93. In 94, I became a competitor of Gartner Group by joining IDC. And then I was a competitor of Gartner Group by joining a company called AMR. And then I left AMR to start my own company. And then AMR got acquired by Gartner Group. And then I retired, and Gartner Group, that was the financial crisis, and Gartner Group kept going up. 1,400%. What does AMR and Gartner Group do? They advise companies on what technologies they need. They keep track of who has the best technologies for ERP, human resources, supply chain planning, you name it. Okay? AI software, AI hardware. These guys are the experts. Okay? These companies hire multi-decade professionals who used to make the stuff, write the code, use the code, you name it. Okay? Real live, multi-decade professional experts who are paid to be unbiased advocates of the best technologies and let the customers know. GM, GE, Johnson & Johnson, you name it. Companies that need technology sign up and pay Gartner for their advice on what technology to buy. That's why Gartner's such a great company. Now, to answer your question, this is important for everybody. I know I might lose a few people watching for this, but it's important. The people that drop off are going to be one step closer to not becoming a millionaire by not understanding this stuff. Okay? By getting all of this data, find out that Johnson & Johnson needs a supply chain solution. Find out that GM needs one too. Find out that GE needs one too. Holy crap, seems like everybody needs supply chain solutions. Who's the best supply chain provider? SAP. Okay, maybe SAP's a buy. That's how it works, right? And we actually helped to negotiate the deals. Over $2 billion worth of deals were negotiated when I was at those firms. So Wall Street would pay us to find out who are the top companies? What's hot right now? So at the time, I'd be like, supply chain's hot, and I2 is the best player. Manugistics is number 2. And they went out and they'd buy I2 and Manugistics, and they made lots of money on those stocks. Okay? That's how that works. So, not easy to get. Okay? Let's go back. Let's stop losing. Let's see here. Question. Mark, what's your take on SNES reliance on equity warrant financing? That's a good question. Too many questions on SNES, by the way. Let's wait on some of that, right? I'll answer this question. So, look, SNES just raised a bunch of money. Based on their current run rate, it'll last them at least a year. The run rate's going to drop off, the burn rate, I should say, how fast they're burning money. So they got enough money for a year if they continue to burn money at this pace. I don't think they're going to continue burning money at this pace, so I think they got enough money for at least, let's say, 18 months. But 15 months, actually 14 months from now, there's going to be an automatic warrant conversion based on the expiration of warrants at $4.15. So they probably, I don't think they need to do another raise. If things go well, they're not going to need another raise. If things don't go well, we don't want to be in the stock. So stay tuned. All right. So I'm just letting you know. And what would support the shift to funding their own operations with cash flow? They need to get up to 7.5 million in revenue to break even. In relation to TPCS, notice a potential delisting due to delayed response of quarterly. Is this a nothing burger? Yes, it's a nothing burger. It's happened many times before. I wouldn't worry about it. Great question, because you almost answered it yourself, and it was a nice yes and no answer. That's how we save time. Thanks on Aehr. Do you use call options, and any thoughts on their use? I don't like buying options. When you buy an option, you're paying a premium on the price, and you're paying a premium for the amount of time before the option expires. It's a double premium, okay? That makes it a bet, because something has to happen to make the stock go up enough in a certain time frame, or you lose. Sometimes 100%. If Aehr's at 15 and you buy an August option 20, and the stock goes from 15 to 20, if I bought $1 million of Aehr, I just made $333,333. You lost 100% of your money on those options. I like to sell calls to reduce my position sometimes if the call options are paying a lot, and I like to sell put options to give myself potential exposure to a position. Go ask AI or YouTube about calls, puts, how they all work, buying and selling calls and puts. I do not like being the gambler. I like being the casino. If you buy calls and puts, you're gambling in large part. If you're selling calls and puts, you are feeding the gambler, being the casino. I make lots of money selling calls and puts. Next, put that in your notebook because I answer that question far too often. MBJ, yeah, you said it. Oh, I like it. You're learning. I believe you mentioned on one of the weekly Wolf Financial shows that you are seeing some data points that point to customers slowing their AI purchases. I don't remember saying that. Point to customers slowing their AI purchases. I remember that might have been months ago, man, because I'm not seeing that happening. I haven't been seeing that happening for months, bro. And dude, you're one of the good ones. So let's talk about it in the chat. For VTSI, Sabrina, by the way, if you're a woman, I dig it. 5 question marks at the beginning makes it easy for Mark to find the question. Okay, I dig that. Thank you. See, the chicks are smarter a lot of times. For VTSI, it's revenue very cyclical over the years, and ATM at the moment, its revenue finally picks up after a few down quarters, but its stock price doesn't really move anywhere. Is it a wait time stock? Oh, Sabrina, you let me down. You let me down. Because it's a gold mine stock. It's always been a gold mine. It's been a gold mine stock for like as far back as this chart goes, basically. This company, I'm not going to tell you. Go watch the video and learn what great find, wait time, gold mine means. And you'll know that it's a gold mine stock because their solution is proven in the marketplace. They're in a rough patch within a gold mine phase. Man, after I gave you a compliment. I'm now in a 30% tax bracket. Managing tax on short-term gains has become difficult. Do you have any tips for managing tax on your positions as a multimillionaire? Yeah, get a financial planner. I'm not that. And I'm not here to answer questions like that. AI can help you as much, if not more than me. With the new TSSI facility coming fully online and systems integration having larger margins than procurement revenue, what would you see as a good number for systems integration revenue? What would I see as a good number? Something more than what we've seen recently. They've been doing like 7.5 million per quarter for 3 quarters straight. All right. Where the stock is right now, they probably have to give us something closer to 20 million to justify the current stock price. Okay. What would be a good number? I mean, anything more than 7.5, let's see some growth, right? And I think we are going to see growth. But it's a tough question to ask. What would be good? What would I consider good? I don't think about what's good or not good. I just calculate what the value of a company will be at various levels of revenue and profitability and look for the bargains. Okay? I have a hard time buying a lot of TSSI at this level because, number one, right, it's above my risk reward lines. By the way, what I own is a trade. Okay? What I own of TSSI goes completely against the rules of risk reward. So if anybody said anything about that in the chat, thank you. You're paying attention. Congratulations. Purely a trade on the possibility that they get a lot of all that Elon business that I see flowing right now. Okay? While I go and reassess whether this line needs to be moved. Bro, I do not move these lines easily. Okay? They turn red and green for a reason. They were white at one point, then they turned color. That means I'm willing to put a ring on the finger when it comes to this. For me to change that is going to take a lot. Okay? But at 26 bucks a share, they got to give us at least a buck of earnings. 25 cents of EPS. They only gave us 10 last quarter. They got to more than double that just to justify this price. And I don't want to pay a justified price. I want to pay a bargain. For me, a bargain would be if this stock should go to 50, right? That makes me interested. I'm interested if TSSI is going to 50. And for it to go to 50, I want to see at least 2 bucks of EPS, which means 50 cents per quarter. So that's where the question should come from. How much systems integration revenue would be required to make 50 cents per quarter? And I'm going to try to get the answer to that question before the end of the weekend, because I've got a model already and I just have to play with the numbers to see what it takes for them to get 50 cents per quarter of EPS. Next question. With Crescendo guiding to 100 million in 2026 versus analysts at 75 million and OCI migration nearly done and this and that and everything, do you see big upside if they execute? Nicholas, stop thinking so much. Oh my God. With Crescendo doing this, that, blah, 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 with this, that. I could add a million other data points to that, brother. I don't mean to make fun of you, but there's, with the CEO going on vacation next week, do you think the stock will go down? No, you're thinking about too many things. Too many things. All right? I do the thinking. I will teach along the way, but trust me, you're thinking too much. Too much thinking. Think less, right? Until you understand how to do professional Wall Street level research on companies. And forget Wall Street level, because Wall Street is below. Wall Street's below my level. The average Wall Street analyst is way below the level that my mentors have taken me to. You know, I'm trying to reach for Druckenmiller and Buffett right now. I'm in the AAA, they're the major leagues, or maybe I'm in the major leagues and they're the all-stars, the GOATs, whatever you want to do, right? Then I'm not patting myself on the back. It's just the reality. I know where I stand. And I know where most of Wall Street stands because they used to be my customers. You can't do it, okay? Unless you put the work in. Once you put the work in, you'll know. You'll know when you are on Wall Street level, okay? And then you can think about drawing these lines based on the research you do. And then you don't ask a question like that, because you will be able to draw these lines and you'll be able to look at this chart and say, this company, I'm saying it now, this company is operating on all cylinders. And it's not trading like it's operating on all cylinders. That's all you need to know. The stock to me is a bargain. They've gotten price targets up here with good reason, in my opinion. Congratulations, Wall Street. You got this one right. It's just we got to see investors follow along. And maybe we're all wrong about it, but that's okay. That happens, right? But most of the time we're right, and the risk reward is way in our favor because we've got 43% potential downside, and we've got 178 potential upside. Next question. Do you still like ATGN? Shut up. My channel. That's your name, my channel? Channel 0. You're a 0. You're the dummy of the week so far. Do you still like ATGN? Do you still like me? It's like elementary school. My first girlfriend, do you still like... No. No, I don't still like you. And if I did, I don't now. We're breaking up. I'm going to go out with your best friend. Hit the bricks. Go do your homework. Shoot. You. Hit the bricks. Go do your homework. Shoo. Stupid. Go to your channel, my channel. You didn't do your homework. You didn't watch the video. You didn't buy a $1 pen and a $1 notebook. So why should I talk to anybody who can't afford a $2 investment in a pen and a notebook and can't watch a video for 1 hour and absorb it? You're dumb. More on that in a minute. Moron. You brought up Supermicro. Feel free to skip my question. I have shares at 58. Would you hold until Colossus 2 is finished? There you guys go again. Stop doing that. Oh, there's a catalyst. I want to hold it until Colossus 2 is finished. Are you stupid? Don't you think that people have already thought about that and it gets priced into the stock? Or maybe it doesn't. How can we find out? How do we know if Supermicro's work on Colossus 2 is priced into the stock? Stupid. It's a simple answer. We have to ask everybody on the whole freaking planet. Go do that. Do me a favor, go do that and come back to me and tell me what the answer is. It can't be done. This is your risk reward chart on Supermicro to the best of my ability. This is all you need to see and understand. This tells you what's baked in, because if they're operating on all cylinders, this is where the stock can go. If they're not, this is where the stock can go. In my opinion, based on my math, based on 100 hours of research on Supermicro that you can't do, not because you're dumb, but because you haven't gotten that education. That's what I'm here to help you with. I do the work and come here for 2 hours and tell you what I learned. And all you have to do, after I tell you all that, most of what I talk about on the show you don't even need. The dude that asks me for the charts, show me this chart, show me that chart, show me that other chart, that's the dude that knows what he's doing. Because he knows all he has to do is look at the chart and maybe ask me if they're operating on all cylinders, and then he knows everything he needs to know. Mark, do you think SMCI is operating on all cylinders? While you answer the question, can I see the chart? That's it. You understand? And I don't need that question every week, because if I gave you the answer last week, they're probably still operating on the same number of cylinders. And if something changes, I'll let you know, so you don't have to ask me every week. But nobody's asked me in a while. I would say SMCI is operating on a decent number of cylinders. I don't love the company. Okay? So what does this look like to me? I don't love it. I think it'll probably work because the rising tide floats all boats, but your money is probably better off somewhere else. You can make the same money that you'll make in SMCI in some other company that I'm covering, for example. Curiosity stream. Perfect example. I'm waiting, by the way. I haven't completed my analysis. These are not risk-reward lines because 286% annualized cannot be. Has to be 20, 30, 40 in that range. Can be 10. No more than that, really, because a company can't grow that fast long term. Even look, you want proof? Apple. Risk reward chart for Apple going back. Long time. Me love you long time. 18% CAGR. Nvidia. Risk reward charts going back long time. What do we got? 20% CAGR. See that? Normal kind of growth. Curiosity stream. That's clearly technical lines because the CAGR is too big. Write it down in your notebook, folks. If you don't know what CAGR is, ask AI later so you can find out. And then when it tells you that it stands for compound annual growth rate, ask it what that means and learn. So you don't get me calling you stupid because you're stupid. I'm waiting for a pullback, a full pullback here, or a sideways move that gets closer to the bottom of this channel. We're getting interesting here because Curiosity Stream is kind of making itself the broker for video content to be licensed out to the hyperscalers. And you see VO3. You see the results of LLMs taking in video content and learning how to make videos itself. This is going to continue. Videos are going to continue to be in demand to train these models to make better and better videos. Eventually that Avengers movie, where on Stock Talk Live, I'll be there to say, I told y'all this day would come. I might have an old gray beard by that time. We never know. I don't think so. I think it's going to be in the next few years. It might not be an Avengers movie, but we will. Watch. I bet you we have a full-length movie, maybe not in the theaters, but a full-length movie made by AI within the next 2 years. Watch. I like Curiosity Stream, just not quite at this level. I own some, but not much. I own a lot of things, by the way. A lot of them are bookmark positions, and I'm playing around a little bit. Don't do what I do. Follow the rules, right? I actually should be up a lot more. If I followed the rules better, I'd be up even more. It's crazy, right? But I'm a dummy too. I'm human. I make human mistakes. I get FOMO, YOLO, right? The less I do that, though, the more money I make, and the same will happen for you. If Navitas hasn't used Aehr yet, might you have knowledge of who they currently use for SIC testing? Probably nobody. That's a good question. Probably nobody. I'm finding out that a lot of these companies are not really using anybody for wafer level testing. They might use some other form of testing that's inferior, and I don't know who they're using for that, but it's a complete paradigm shift. It's not real competition. It's, do you want to do it this way or do you want to do it that way? And the way that Aehr does it is far superior. It's a whole different way of doing testing. Have you mentioned whether or not we're in a light yellow alert? Yeah, Bill, I did that last week. I mean, all you have to do is look at the chart. You can see the Qs now touched the light red line, which seems to be, you see what happened the last few times. It didn't have to hit the bright red line to go down from there, so that's dangerous. S&P 500 well above. Go back and watch. And by the way, the Russell still has room to move, okay? But go back and watch the beginning of the video, Bill, because there was a big discussion about this, because we could see a 1999 style break. And I was an analyst in 1999, so I know. It was if I say so myself, it was a great beginning of the show. Go back and watch it, y'all. Clearfield, I went through the last call, and the CEO mentioned seeing a U-turn recovery. Can't find any independent experts to confirm this, but have you had time to investigate? Yeah, Zach, I mean, we are seeing, by the way, I love Sherry Baranek, CEO. She probably doesn't remember me at this point because I haven't spoken to her for a long time, but I knew her way before this chart. Way before this chart goes back. That's the look on Clearfield. This is where we are. We're still looking for some legislation that hasn't hit yet. Okay, so they are seeing better business, but the stock's kind of reflecting that a little bit. Do I own any right now? Maybe. I don't remember. If I do, it's not much, obviously, because I can't remember. Do you date that girl? I don't know. I haven't in a while. But yeah, clearly on the radar screen. Finally, I think it's closer to the right side of the tunnel. We see some light at the end of the tunnel. How can TPCS so often miss their filing deadline? I'm a shareholder, but they are inept in this area, or is it a very complicated process? Joe, that's a fair question. No, they were inept. That's why we got rid of those bozos, those idiots on the board. They've replaced people, and now they're cleaning up the mess that those idiots created, right? There's your chart on TPCS. So stay tuned. They're going to clean up the mess. The delay this time is less than the delay last time. So they're making improvements. That's what we want to see, just improvements. It's okay that they're late, as long as they're less late than last time. And they are, from what I see, going to be less late than last time. This is getting cleaned up. Okay? One of the new directors does not take any BS. I would not want to be on the wrong side of this gentleman. Okay? And the other new board member is a former general. This is two of the best new board additions that you could hope for a company to get. A bulldog and a former general in a defense company. Stay tuned. They're not out of the woods yet. What do you believe is causing the worldwide... By the way, Rob, come on, bro. Where's your question mark? What do you believe is causing the worldwide mandates on bus monitoring benefiting gatekeeper? That's a great question, and it's very simple. We've gotten to the point in society and in AI where AI is capable of taking live video streams of what's happening in and around a school bus, a transit bus, what have you, right? And automatically alert people if there's something going on that shouldn't be. A fight on the bus, somebody speeding crazy, doing acrobatics outside of the bus. Anything that's not going on, anything going on in or outside the bus that you as a parent wouldn't want going on, the AI can help stop that from happening. Okay? We've gotten to that point in history where AI can now do that. Be that extra body, that extra set of eyes on the bus that we never had, right? Like, we never had a chaperone. Well, we had chaperones on field trips, but when you go to school on the school bus, there's nobody on that school bus except the bus driver. If shit starts to go down on the school bus, what happens? The school bus driver pulls over the bus or stops it right in the middle of the road. That's what I would do. Slam on the brakes. Everybody goes flying forward. What the F is going on back there? And somebody's usually getting it, right? Once it was me. It happens, right? You can't win every fight. But we don't have people on those buses. It costs money, and they don't want to put that in the budget. But now we can, because we got AI to do it. So now you're seeing mandates going out all over the place. Not just because of what's going on inside the bus, stop the fights, Money Mark's getting his, right? But outside of the bus, we're going to hand out tickets to anybody that goes past the stop arm. Because every once in a while, some poor little 7-year-old gets run over by some a-hole who doesn't know the meaning of the word stop. Dummy. You didn't have your pen and notebook out in driver's ed? Congratulations. You just killed a kid. You get to live with that for the rest of your life, but his poor mom and dad has to live with that for the rest of theirs. F you. Go to hell. Right? And nobody wants that to happen. Nobody wants a new person in jail the rest of their lives for vehicular homicide. Not the rest of their lives, but whatever. And nobody wants a parent with a dead child. I have a 14-month-old kid. I'm almost crying thinking about that possibility. Okay? So yes, we're going to see those mandates. Go check out my blog site, by the way. I posted a new article about this. All those mandates there. GKPRF. There is, look at that thing of beauty. Oh my God, we've been doing so good on this stock. Still so much room to move too. Look at that. Let's get that right. See, 18% CAGR, something reasonable. A percentage growth rate that the company can do over a long period of time. Stock at 99 cents, the top of my risk reward channel for the end of next year, or 2027, 3. So this can triple in 18 months from here. And who knows? They might not even be public by that time. Maybe somebody comes in and offers them $3 to take them out because they're winning so many deals. And because these mandates helping them win more. Last call for questions. I'm at the bottom of the live feed. I'm going to read these last few questions. If you have any more, put them in. Because when I get to the last one, we're calling it a night. We talked about some extra names in my portfolio. It's 1:50 East Coast time. It's 8:50 here in Chisinau, Moldova. I gave up dinner with my family to do this for you because I can't do tomorrow night. All right? So I make sacrifices to keep this going for y'all. Thumbs up, let people know. Money Mark, a multimillionaire who lives in a penthouse, gave up dinner in the capital of a foreign country to do this for y'all. Give me some hearts. Give me some thumbs up. Give me something. Give me a hamburger. Final questions. Have you run any models on F-Tech? No. What a possible new data center contract could mean for them. Dude, that's a question that you can go out and ask investor relations. It's a fair question. What would a new data center contract potentially mean for them in terms of revenue? It's a fair question to ask them. I haven't had any time. I got so much going on. I haven't even started to really dig into F-Tech because they're not really standalone. They're a piece of these, like it looks like a good piece of these bids that are going on, but they're not the prime, they're a subcontractor. So I got a lot of other things I can look at here, especially considering my expertise is not in what F-Tech does. So that puts them lower on the priority scale. You can't imagine how many names I have to look at. I'm sweating. Let's see. Amplitude chart. I really like Amplitude. The more I'm hearing from contacts out there, there is a gentleman who used to work at Gartner Group. Remember? Oh, chart didn't look like that because I'm showing you Amplitude. But I talked about Gartner Group earlier. If you don't remember, look at your notes. If it's not in your notes, you're an a-hole. You deserve to be stupid. He worked at Gartner. Now he works at a company that is evaluating solutions like Amplitude's. And his feedback was this. Amplitude's solution is expensive, but also extensive. It is probably the best solution easily, and we're probably going to buy Amplitude solution because even though it's expensive, it's worth it. This is the kind of feedback I've been getting all over the place. Amplitude is the best of breed solution provider for what they do. Go ask AI what Amplitude does. Just say, what does the company with the ticker symbol AMPL do? And when it tells you, say, can you simplify that for me? Give me an example of what somebody would use that for. Just ask questions like that. In fact, you can do it in audio mode. You know, you won't hear it. I'm not going to do it. Right? In Perplexity, there's an audio mode. And if you don't know how to find it, just ask it. How do I find audio mode on Perplexity? And then you can just have a conversation. My mother does this. She loves history. I heard her the other day. Perplexity, tell me about Che Guevara. Was he executed? How was he executed? Blah, blah. My sweet mom, 70, never mind. Love her to death. And she's using Perplexity. And if you're not using some level of AI, you're a dummy. You're an idiot. What kind of idiot are you? I got we've got a 70-something-year-old mom using AI, and you're just not how stupid that is. You're a fucking idiot. You're so stupid. You're not using AI. And my 70, like late 70s year old, I'm 50, I'm almost 55, y'all. So you know how old my mom must be. And she's using AI, and you're so stupid. You're such an idiot. All of you who are not using AI are so stupid. Oh, now I'm sweating up. The AC's on, but I'm still sweating. Cracked myself up with that one. Oh my God. There's your amplitude chart. I could just as easily turn these red and green. I really feel great about this company. It's got a big market cap though. 1 billion, 1.5 billion. I don't love that. Like, that's not my favorite market cap. That's why they are simply in the unofficial picks. Okay? This would be an official pick if it had a smaller market cap. Love this company. I think this is a great company. What do we got? Oh, here we go. Iridex showed improvement. Based on your experience, what's your take on their future? Is this the start of a strong turnaround? Still, Constructora, write it down. I'm trying to figure out. I thought that their retina business was wildly profitable and their glaucoma business was wildly unprofitable. But when I spoke to the CEO recently, he said that the glaucoma business is now roughly profitable, yet the whole company is not wildly profitable, which tells me that the retina business isn't wildly profitable. And so that creates a dilemma in my mind that he needs to rectify before I get more constructive on this stock, which is all white lines right now. I can move that. There's your chart. Okay? We've had fun with this. I had a multi-bagger here. We had little plays here. We had some losses here. Overall, we made money on this company, but this has been a wild one. Hi, Mark. Do you take into consideration the float of Gatekeeper when choosing it as a multi-bagger? Oh, God. Oh, God. Oh, Lord. Oh, Lord, help this person. I don't choose something as a multi-bagger, first of all. And I don't, of course, well, not the float, the shares outstanding. I don't care about the short interest and the float and it's a penny stock and the short squeeze and the options. No, you guys are playing a game. I'm making millions. You're playing a game. I'm making millions. I'm doing business. Okay? Not trying to make fun of you, but I am making fun of you. So why? Why? So that you'll pay attention. I'm not trolling you. I'm trying to teach you something. When I look at a company, I don't care how many shares it has outstanding at all. At all. At first. I want to know, what is the company worth? And I go through an exhaustive 100-hour process to figure that out. Okay? And once I figure out what the company is worth, then I look at how many shares are outstanding and divide it up. And I say, this is what I think the stock will be worth if they're operating on all cylinders. And then I draw this top line based on that. Okay? So all that research told me that Gatekeeper should be worth $3 a share by the end of 2026 if they operate on all cylinders. Don't ask me how I do all that math. It's 10 years of learning. Okay? And that becomes my top line. Then I can draw the bottom line. And that's it. Done. That's it. Done. No float, no options, no short squeeze, no nothing. Not. Just where is it in the risk reward channel and how many cylinders is it operating on? All right. Last question. And by the way, so I don't choose it as a multi-bagger. I'm just telling you that the stock should be $3 if they operate on all cylinders by the end of 2026. That would make it a multi-bagger. It's already a multi-bagger, right? But I'm not calling it a multi-bagger. I'm telling you it's got multi-bag potential. Just to be clear. Could you please explain the latest news? Gatekeeper announces closing of a bought deal, private placement. Yeah, they raised money. James, I'm not going to go deep in that because what you need to do with a question like that is take it word for word and put it into Perplexity. You can even put the whole hello in there. And if you put that question into Perplexity, it'll answer that question for you. And with that, 2 o'clock on the dot, 2 hours on the dot. My wife said it couldn't be done. I'm going to let them in the door because they're probably walking outside saying, I'm not going to go back in with Mark holding this show in the middle of the... Never mind. I'm not going to keep going. It's 2 o'clock. I'm going to cut my losses. Take my win. Till next Friday, stay tuned. I'm traveling around Europe. I'm going to be in Montenegro and Croatia and all that, God willing. Okay, so maybe we're going to do this at a different time next week. Maybe I'll take the week off. Who knows? Until then, though, go have a great weekend. It's Money Mark. It's Stock Talk Live. Go tell everybody about me and have a good weekend.